The market crash of 2026. Are you prepared? This is probably one of the most important topics to be discussed right now. Are we headed for a major crash coming next year? With war escalating, interest rates being kept super high, and a housing market ready to pop, things are not looking good. And so in this video, we'll be covering the 5 warning signs that all say a major crash is coming our way. Then we'll cover the most important decision every investor needs to make before the end of the year. However, then we'll finish with the good news, which is how you can win no matter what happens. And this is using the strategy of the world's greatest investor, Warren Buffett. Okay, so first up, let's jump into the major red flags, which all say to me that next year could be a very nasty year for investors. So starting with red flag number 1, and what do we have? Well, this is the Buffett indicator. And it was called this because Warren Buffett said this is probably the best way to know whether the stock market is overvalued or undervalued at any given time. And quite simply, it divides the stock market by GDP. And if we put in the historical average, then it's all the way down here. So this would be what is called fair value. And when it's below this line, it means the stock market is undervalued. And when it's above this line, it means stocks are overvalued. Now, this was the dot-com bubble here, which went all the way to 162%. Before a major crash. This was the great financial crisis, which did actually bring it back below the historical average. However, this is the absolute tear that the stock market has been on ever since. And in fact, it did top out at 220% before a nice big pullback. However, we're still very close to these all-time highs, almost 200%. So this is saying that stocks are really overvalued right now. And the thing to watch is what happens in Q4, because Q4 tends to be the strongest quarter for stocks. So if the stock market goes on absolute tear into the end of the year, this would be a major warning sign. The second has to do with Jerome Powell, the Federal Reserve, and the Fed's funds rate. So interest rates are being kept at historically high levels. Now, interest rates, when they were down here, so this is near to 0%, and this is amazing for businesses because money is cheap, so everyone can borrow money, including businesses, to get massive growth. So this is when risk assets tend to soar. However, the flip side is when interest rates are very high, and this is like a big handbrake on the economy. It makes it hard to borrow money, which is why businesses struggle, and who employs the people? Businesses. So there's a big knock-on effect. And you'll see these gray bars here, this is when the economy goes into recession. And you'll notice it's after peak rates, and it's actually after when the Fed starts cutting. This is normally being too late, and it goes into recession. And then he has to cut very, very quickly. Same thing here. These were terminal rates, and it's actually when he starts cutting. The Fed historically is late in cutting rates, and it's after the Fed starts cutting that it's often too late. It goes into recession, which is why they have to cut very, very quickly. And it's the same thing here. We've had terminal rates here, and it's actually when they start cutting is when the problems start. So this is the second warning flag. Number 3, and amazingly, this is a 100-year technical analysis chart. And here is the trend line going all the way back to the major crash in 1929. This is when there was an epic crash in the stock market. Then the trend line takes us all the way up to the dot-com bubble here, where it touched before getting a major historic crash. And then lo and behold, almost 100 years later, we are right back up, kissing this trend line once again. So just another red flag indicating this could be the next major crash. Number 4 has to do with the housing market. And if we adjust for inflation, this is how unaffordable house prices are in the US right now. This was the previous bubble in 2006. This is how high it got before the major crash in housing. However, look at where we are right now. Again, housing market screaming major bubble, much bigger than the last. And then finally, this has to do with the crypto market. You see, Bitcoin and the crypto market has been going through very distinct 4-year cycles. 3 years of massive runs before a major crash down, 3 years of a massive run before a major crash down, 3 years of a major run before a big crash down, and we are just about to go into Q4, and this is saying that 2026 is the year where there's going to be a major crash in crypto and Bitcoin, and Bitcoin tends to be a leading indicator. So add all these together. These are the 5 warning signs that every investor needs to know about. Now, the most important decision every investor needs to make is their asset allocation. So if you put your money into a pie chart, how should you be dividing your money? This is the million-dollar question. How much should be in stocks, in bonds, in cash, real estate, commodities, crypto, or anything else? Now, it's a very simple concept, but it's very difficult to do. A lot of people will outsource this to a financial advisor, or by looking at many different asset allocations of different people, different ages, different values. Over time, you get to have a better understanding of what you should be doing yourself. However, knowing how and where you should be invested is always the number one biggest decision any investor can make. So when in doubt, what can we do? Well, we can turn to the world's greatest, most successful investor, Warren Buffett, and see what is the Oracle of Omaha doing himself. So to oversimplify this message, this is an asset allocation where someone is 100% in cash. Now, the good thing about this is that if there is a major crash coming next year, then you are pretty much 100% protected. You just lose a couple of percent due to inflation. However, the downside is if the market just continues to rip higher, then you don't benefit at all. So it's a super safe portfolio. However, it doesn't give you any upside. On the flip side, if you are 100% invested into the markets, whether that's stocks or crypto or any other split, then obviously if the market continues to go higher, then you fully benefit and make a lot of money. However, this is very, very dangerous if there is a market crash, because you take 100% of the impact. So I went over and took a look at Warren Buffett's portfolio, what he's doing at Berkshire Hathaway, and it was very, very surprising. So what do you think the asset allocation of the world's greatest investor is right now as we come into the end of 2025? Well, interestingly, he's pretty much exactly 50% invested and 50% in cash or cash equivalents. And it wasn't even 49 or 51, it was pretty much exactly 50-50. 50. All this money is invested in the stock market in Berkshire Hathaway, and this is his cash position, which he keeps in short-term government bonds, something that cannot crash, which is giving him a yield. And the great thing about this is that if the markets continue to have another up year next year, he makes an enormous amount of money from his money invested. And if there is a major market crash, he's got plenty of capital ready to deploy, as in market crashes, these are historically the very best times to buy. And if we take a look at Berkshire Hathaway and what they are doing with their cash position, you can see it's been relatively low for many, many years. However, look at what Warren Buffett has done in just the last couple of years. He is getting out of the stock market and going into cash. So this is someone who is preparing for a market crash. And Warren Buffett knows this is how you win either way. The big question for today was, is there going to be a major crash next year? Well, the Buffett indicator is close to all-time highs. Interest rates are being kept historically high. There's a 100-year technical analysis trend that is also running into major resistance. The housing market is looking like a major bubble. And if history repeats, then next year is the year that crypto does a major crash and Bitcoin tends to be a leading indicator. The most important decision all investors have to make is their asset allocation, which although is a simple concept, it's certainly not easy to do in practice. And when in doubt, we can look to the world's greatest investor who's laid the path out, being 50% invested and 50% in cash or cash equivalents. And this way, if the markets continue just to head higher, then you win. However, if there is a major crash, then you have the ammunition to buy in, which is where the very best gains are made. So there are, guys. Hope you enjoyed. Now, all I ask is that if you did find anything useful in this video, then please share it with a friend. If you do have any burning questions that you must get answered, then simply use super thanks below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new super thanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use super thanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does, and I'll see you in the next video. Bye for now.